Been pointing out to two trends from the word go. We have seen this global flow of money into all emerging markets and therefore a very strong Asia and actually for the second day running in the green. As well, within India itself, while the mid-caps were leading the charge from mid-February onwards, over the last 2 days, clearly the big caps have taken charge. And today you can distinctly see the outperformance of Sensex and Nifty over the mid-caps. Now, how long do these trends last? Arvind Sanger of Geosphere was someone we spoke with, and he says we may see a sustainable move on some sectors like NBFCs because the situation is stabilizing. He also says investors must continue to look for high-quality mid-caps.
The NBFCs, which are oversold, we're going to be a little more selective there, but I think there too, you're seeing at least some signs. You had a Canadian pension fund invest in Edelweiss. So you're seeing some signs of some backstop being provided by global investors, which give comfort that some of the NBFCs are going to be able to ride out the short-term challenges that they are facing, that will continue to face, but it's not going to be, it's not going to be an accident for most of these NBFCs. They will come through this, even if they have to take some write-downs. I think we should have a more sustainable move because the domestic story, also remember, between last October and now, you had the whole NBFC crisis. So again, we're assuming that the worst is behind us. And we have been looking at some of the, oversold high-quality names because, there were some large cap names that never really sold off much, which is where investors were hiding. But some of the other names that sold off a lot, is where some of the opportunities lie. And there are some high-quality mid-caps. You were talking about names like, Ashok Leyland, Motherson Sumi. There are others of that category or of that caliber that we think there are opportunities in.
And a driving force of this market up move has been the strong FI flows. FIs have infused in excess of $3 billion in the cash market since the start of the year. Earlier today, we spoke with Cameron Brandt of EPFR Global to get a sense of the FI flows and the kind of impact it's having on the Indian markets. Listen into what he had to say.
We've seen a really significant rotation now from developed market funds of pretty much all stripes to emerging markets. Still seeing more of a preference for diversified exposure, but overall this is now an established trend, which I think is sort of driven by a sense that emerging markets, certainly in relative terms, have more upside than their developed market peers. And the Modi administration off and on has been seen as a sort of a reformist one. There's a very, very clear pecking order, and it is at the country level quite simply tied to perceptions that there may be a reform story. It's certainly coming in sort of shaded to the ETFs. If you look around for sort of the major risk factors, the U.S. is moving into its next election cycle. So, there's not too much you can hope from the current political dynamic. And Europe is also facing, as it has been constantly for the past decade, a series of challenges which are making investors step back.
Okay, that's some expert opinion on flows.